What's up, guys? You are not ever going to guess what stock we are talking about today. That stock is Hershey Corporation, HSY. I know we talk about it, probably more than I should, but I've been pretty hyper fixated on this one for a while. So we're going to get into it. But first, let's do a quick life update. In my last video, it was the December portfolio review. Guys, that video is doing awesome. A lot of good support, a lot of new subscribers. If you're new here, welcome to the channel. We are glad to have you. And this is, quickly becoming the best dividend growth investing community on YouTube. We're going to continue to do that, I promise. So I talked about the casino last video. I was going to the casino for the first time. I said I would update you guys in this video. I can update you. It's not really much to update. It was a casino in southern Indiana. So I guess, what do you expect? I was a little bit underwhelmed. I knew I was going to go in and lose some money. I didn't lose too much money. I don't feel like it wasn't that big of a deal. It was just like, it's a casino. I don't know. Stay away from gambling, even though it can be fun, I guess. But whatever. So no real update on the casino. Sorry about that. Otherwise, staying busy. A lot of stuff going on. I'm trying to get a good lift in every other day. So, 3.5 a week on average. Moving into 2025, I want to get, a few personal things done. Continue working hard, continue growing this YouTube channel. That's the way it's going to go, I guess. So, Hershey, what we came to talk about. Why are we talking about Hershey? I'm sure if you're a shareholder, you probably know what this video is going to be about, but it's going to be about rumors of an acquisition from Mondelez Corporation. So, essentially, Mondelez Corporation offered to, acquire Hershey Stock, and Hershey rejected that offer because, they felt it was too low. All right, so, we're going to visit a few articles. I'm going to run through this, try to give you guys a big picture point of view, and then, kind of tell you where I'm at with this one. I am going to pick up one more share of Hershey. I just put 200 in the account. I'll pick up a share of Hershey at the end of the video. It'll fill tomorrow because it's already 6 p.m. I don't know. I just think it's kind of dumb to make a video about investing without investing at all in the video. So I feel like I should probably buy at least one share. Not too sure. It's completely in the budget right now, but we will figure it out. Let's get into it. So Hershey's main owner rejects Mondelez's offer as too low. Okay, we will get into this main owner. We will get into what we know about this offer. Okay, so a preliminary bid was made to Hershey from Mondelez, and it was essentially declined. Okay, they were not getting enough. They were not getting enough per share to give up the company. Here's kind of my take on that. Rewinding a little bit, when I saw the news on this Mondelez offer, we will go to it. We'll go to 1 year, 1 day. So this big spike was when that kind of rumor came out, and it had Hershey had almost a 20% spike. Okay, that's interesting. And we will talk about kind of how I felt and my emotions on this day. I'm like, wow, this is exciting. I've been screaming, Hershey is undervalued. Hershey is undervalued. And now a multi-billion-dollar corporation in Mondelez apparently sees the same opportunity in Hershey, and they want to buy it. Okay, so that's kind of how I felt. It felt good. I did see, I don't know why I just put that line there. I did see an open profit of $1,300 or $1,400 for that day, and now we're back to down 49, so pretty much break even. So yeah, I had some, I guess, emotions like, yeah, that's right. Mondelez sees the same undervaluation in Hershey that I see, and they want to take advantage of it. So, I mean, that's kind of how I felt on that day. Main owner of U.S. chocolate maker Hershey Co. has rejected a preliminary takeover offer from Mondelez International Inc. People familiar with the matter said potentially ending a fresh pursuit that would have created a food giant with combined sales of almost 50 billion. Okay, so had this offer gone through, it would have given me, more diversification within the consumer staples space. I guess that could have been a good thing, but I also love Hershey for Hershey. So I didn't really find myself, rooting for one side or the other, I guess you could say. I was more just kind of from an observer perspective. However, Hershey rejecting this offer as too low, and it does bother me that we don't know the offer, which that's obviously probably never going to come out. It seems they've already kind of moved on. But we don't know the offer. But Hershey rejecting it as too low, what that says to me is, okay, there are issues right now with Hershey. Sugar prices are high. Cocoa prices are high. There's been inflation, a little tighter spending habits from consumers have hit Hershey a little bit. But Hershey still, they understand that they need to stay the course, and they kind of believe this is kind of a lot of short-term headwinds at once. So I am proud to say, Hershey is not panicking. Main shareholders are not panicking, and they kind of know what they have here, regardless of, analyst downgrades. If I see one more analyst downgrade, it's like based on what, Okay, let's not get off topic, but I kind of am a little. Moving on. Okay, so there is something we do need to discuss. The Hershey Trust Corporation has roughly 80% of the voting power at the company. Obviously, we understand that if one voting power has 80% of the votes, it's pretty much like they call the shots. Okay, I'm a shareholder in Hershey. I could have voted to, do this or do that. But if I disagree with this 80%, essentially I'm going to say my vote doesn't matter. All right. My relatively small portfolio and small Hershey position of, 67 shares now is not moving the needle. Okay. So do we understand that? Moving on. Mondelez has been pretty quick to move forward, with business as usual, it seems, announcing and authorizing a $9 billion stock repurchase program, as well as, reinvesting in brands and focusing on bolt-on assets, okay? This term, bolt-on assets, I was kind of unfamiliar with. It says a term used to describe relatively small deals. So bolt-on assets, we could say, is a way that, mega cap companies such as Mondelez further diversify using, smaller, different segments, other things like that. So what this says to me is Mondelez has moved on, and it's pretty safe to say there will be no acquisition of Hershey. Okay? Between this, Mondelez moving on immediately, as well as, this Hershey Trust Co. being in place, we just talked about that. They seem pretty firm on not selling the company, okay, which, again, I do respect. We already kind of got into this section just from my rambling, but we will go through, what Bloomberg has to say. CEO Michelle Buck has been hit by record high cocoa prices. They have come down from their peaks. We've been talking about this for months now. Sugar costs are also high, and they've had to cut outlook for net sales growth and earnings. Inflation wary consumers watch their budgets. And we will see, the CFO has said the prices of cocoa will be the biggest piece of the firm's cost inflation in 2025. Kind of my take on that is there's not essentially much we can do about it. I mean, it's pretty straightforward that if you have a company like Hershey where the majority of their revenue is on the basis of chocolate or Reese's, something that includes chocolate, high cocoa prices is going to hit their bottom line. There's not much we can do about it from that perspective, but Hershey does acknowledge this, and it seems that they're not being rash. They're not panicking. I definitely respect that. Moving on, we're going to talk about kind of when and why Mondelez striked. So after Hershey's, third quarter earnings review came out, obviously we discussed this as well. Their EPS estimates were $2.49.5 per share. Their actual was $2.34. So that was an earnings miss. We did see the stock not react too much, kind of continue to consolidate. But that was kind of Mondelez's thing of like, oh, there's blood in the water. Maybe we want to overtake this one and further expand, our already giant company. So I'm not going to bore you guys to death, but the bottom line is, Chicago-based Mondelez, they saw the challenges posed by cocoa prices and inflation. It's as simple as that. They wanted to take over Hershey. Hershey has a very, unified amount of voting shares, and they stood their ground and did not let Mondelez take over. That's essentially what happened, guys. So real briefly, let's get into what I am doing here. And I will say, while I did kind of share, oh my God, emotions, big spike on Hershey, like, here we go. What's going to happen? How's this going to happen if the acquisition goes through? Am I going to have to hold on to Mondelez? Am I going to have to, reallocate some of that capital elsewhere? Point is, it did not happen. And I'll say what I'm doing is pretty much staying the course on this one. It's business as usual. While it was a little bit of an ego boost to have a multi-billion-dollar corporation, agree with me, try to take advantage of these headwinds, and I guess that was an ego boost, but I do want to emphasize, I cannot let kind of emotions on this one or kind of the, like the pressure or wanting to be right so bad that I kind of let it affect, my game plan on it. I see it as undervalued. Mondelez did too. It didn't happen. Business continues as usual. That's kind of how I feel about this one. And I almost am happy that it came back down because I'm probably going to keep buying Hershey. I'm going to do the one share tomorrow that'll get filled. But, I do want to emphasize, guys, it is very important to leave emotions out of this game. We talked about the casino, but just like the casino, the best blackjack players, not that I'm super knowledgeable in blackjack, but the best blackjack players do leave their emotion out of it, and they typically have, kind of their strategy, how close they follow the book. They kind of know when they're going to, split, stand, double. Again, I'm not a blackjack guy much. But my point is, we got to leave emotions out of this, and we got to continue the course because essentially in the wake of this, nothing has really happened besides Mondelez has shown their hand a bit, shown a little bit of interest in this one. That's okay. I would not let this whole, news and whatever kind of get to you as a Hershey investor, guys. So that's that. I will go ahead and place this trade. Okay, we're rolling again. So I'm going to go ahead and do one share, and I'm going to do it as a market buy just so, I get to fill in the morning. Like I said, the reasons for that is I'm going to get on here and talk about stocks. I better be investing in stocks. So if today's video is only one share, then it's only one share. I'm not sure it'll go through because the cash hasn't settled in the account yet until the morning. But, we'll try to see if it does. You not have enough available cash / buying power by Okay, I'll make the buy in the morning, so that'll be that. One other thing, guys, I do want to go over is kind of this notion of FOMO. This is pretty unrelated to Hershey, but I guess we'll look at it. This video, we kind of talked a lot about like emotions and whatnot. So, you know, we'll get into the whole... We will get into an example from the past. Could be fun-ish, I guess. So, quick little story or tidbit. You know, before I was strictly a dividend growth investor, you know, you guys know I did do a lot of other types of investing, experimented with a lot of strategies. I mean, you can see on this chart, Fibonacci levels are on this chart. I mean, I haven't visited this chart in a while, but I did make some money in Tesla, lost some money in some other dumb plays. The point is, eventually I kind of got to a point in my career as an investor where I'm like, okay, at least for right now, for the foreseeable future, I'm a dividend growth investor. This is what I do. This is what I understand, and this is what I'm going to preach. But I guess my sophomore year of college, I was like, oh my God, we got to get some more good growth plays. And this was after I realized, like, you know, pretty substantial profits in Tesla, I guess you could say. So I'm kind of like, okay, I'm trimming Tesla. Let's see, you know, what's next? You know, what's my next big 10, 12, whatever bagger? You know, I get real fired up about SoFi. Me and some of my roommates buy into this one. Kind of had paper hands on it. I had 505 shares at one time. Ended up, I guess, cutting it for a loss. And this roommate that was in, like, you know, he was in the same situation as me. He texted me this morning. He's like, oh my God, dude, like, SoFi's a wagon now. So I'm like, okay, that's, I guess that's true. But my point is, do not get FOMO, because for every stock you see that, you know, is a 10Xer, like for me with Tesla, there's always going to be another stock, you know, that can kind of drag your portfolio down or give back any gains you have made. My advice for you is, you know, you're going to miss plays. You're never going to catch every, you know, perfect wealth building retirement stock. My advice for you is to work on your strategy and to make sure you learn and grow from every position you take in this game, guys. So I guess that's kind of what sparked that. Guys, I will catch you next Monday. We'll see what's happening. Right now, I don't have a ton of capital to invest. I'm not going to lie to you guys. The fund money is not flowing in as fast as it was in the fall, but that's okay. We'll stay the course. I'll keep dropping the videos. And guys, I love you. Take care. Subscribe if you're not, and let's build wealth.